You cannot believe the timing, and I think that that's part of the reason why the stock is down 8%. And just to take a half a step back, I think your setup was critical, which is their gross margins ex credits, 14.6%. The street was at 16.6%. That's a 200 basis points miss. In any normal environment, Tesla shares would be down 10 or 15% on that miss, but it's becoming secondary. That profitability question is becoming secondary because it's about what's going to happen in the future. And like you said, in the future, that being 25, 26, or 27, it's related to robotaxi. And I'm going to answer your question is, do I believe it? And the answer is no. I don't believe that they'll be doing robotaxi by the end of this year or early next year. I do believe, though, that eventually robotaxi will come in earnest. These fleets, I believe that that is a measurable opportunity for them when it comes to profitability. So this very painful chapter that they're in related to the margins, you've talked about how much they've declined, that should right the ship. And while they will undoubtedly miss some targets, they're going to hit what is the most important piece that other car companies, besides probably BYD, can't claim, which is they're going to have an all-electric future, all-electric product line, which is the future of vehicles. And second is that they're going to have an autonomous product that is a benefit to margin. And so I don't believe the timing, but I don't really think that it matters.
Jean, it's Sam here. You've had a very busy morning here on CNBC, evening your time, because I did hear you on the program before and after the earnings call. When the stock was down 4%, you were saying that it wasn't much because investors believe that the big picture, the long term, is still intact. Now down almost 8%. What is that telling you about how investors felt about the earnings call, and particularly given that they had acknowledged that they perhaps were a bit sort of over-optimistic on the robo-taxi front?
So shares were down 4% before the call, and that did catch my attention. I was expecting them, based on that profitability metric, for it to be down more like 10%. And then once the call started, the first 10 minutes was Elon talking, and he kind of went through all of their products. And essentially, he didn't say much new. If anything, they had a slight slippage in terms of when the robo-taxi is going to come out. Maybe it's late 2026. They didn't give exact timing, but if you kind of read between the lines, there's a little bit of slippage there. So I think the reason for that second leg down in the stock, that from down 4 to down 8%, was an acknowledgement from investors that they didn't hear what they wanted to hear in terms of when this contribution is going to happen. Again, they take it with a grain of salt, but it would have been nice if he would have said something, there's some other lever that they can pull. For example, on the call, the question came up, will they do advertisement? And they initially said no, they wouldn't, and then later they'd consider it. But if they would have come out in that first 10 minutes and Elon would have said, we're going to do advertising, I suspect that the stock would have quickly reversed path, but that didn't happen. And so I think that's essentially what's going. At the most basic level is this, is that investors who own this for the long term, which is present company included, need to see a path to get there. And when you have the negative profitability, it just is a little bit harder to believe today. And I think ultimately they'll get there, but that's what's going on with the stock.